Hi, everybody, and welcome to another edition of IndieBiz EDU. We're happy to have you all here, and remember that if you have to run off, no worries, it's going to be on YouTube in a couple weeks, and you can watch it at your leisure. Today, we're going to talk about financing for small business, and when I say small business, I do not mean the SBA's version of a small business, which is 500 or more employees. Or less employees. I'm talking about businesses with 20 or less employees, and even more so 5 or less, because that is the majority of the businesses here in the state of Maine. So today we're going to talk about grants, we're going to talk about traditional financing and other programs that might be available to our small businesses here. And first I want to thank Gorham Savings Bank, the sponsor of this series. And I also want to thank the Oddfellows Hall and Friends of Whitford's Corner, who are hosting us today in their space. And with that, I will get going and let our speakers introduce themselves, starting with Julie.
Great. Well, thank you, everybody. Good morning. My name is Julie Viola. Excuse me. I'm a commercial banker at Gorham Savings Bank, and I am a native Portlander. So, I went to Portland High School, went away, came back, and I've been with Gorham for about 23 years, I think, working in this small business space. And like Amy said, small business is not necessarily defined by the SBA standards, but we do work with businesses of all sizes. And in my space, we work in the lending area and have lots of different opportunities. But I'm a native Portlander, so I love the city, and I've been working and lending in the city for a long time. So I really enjoy opportunities like this, and I'm thankful that you've asked me to join you today.
Thanks. Paul?
Hi, everybody. My name is Paul Johnson. I'm the Economic Development Director for the Greater Portland Council of Governments, which is a mouthful, and I'm not nearly as fancy as that sounds. But the Greater Portland Council of Governments, just so everybody at home and here knows, is what happens is everybody in Cumberland County, every town in Cumberland County pays us about $2 per person that live in their town. And then they give us the money, and we do regional activities. And for instance, we purchase a lot of the road salt that your municipality uses. We help buy that road salt in bulk, so it saves your town money. We are also what's called an economic development district, and that's where my role comes in. And I help small businesses access financing, and sometimes I help larger business access financing as well. And I have lots of pots of money, and I work closely with the Environmental Protection Agency and the Economic Development Administration, and also the Finance Authority of Maine, and sometimes directly with the Department of Economic and Community Development at the state to help businesses get money.
Mm-hmm. So the first question we always ask our guests is, what is the last locally owned independent business that you spent money at, and what do you love about them?
Becky's Diner. Nothing's finer.
Says it all.
It's one of our favorite. I think when you say to the kids, where do you want to go for dinner? It's Becky's.
I went to Flea for All last weekend, I think. Yeah, so I'm a sucker for vintage and stuff, and I have a vintage toy collection. Don't tell anybody.
Well, you just told a lot of people.
But that was my last local business.
Awesome.
All right, so down to the nitty-gritty stuff. So based on your experience, what is the number one misconception about small business financing?
I think the number one misconception is that there's a lot of free money. And we'll talk about those things this morning. And I think the second thing that kind of goes hand in hand is that the process is quick and simple. And I think for a lot of people, their experience borrowing money is maybe walking into an automobile dealership and saying, I want to buy a car. And they'll ask you, oh, what's your monthly budget? How much do you want to spend? And commercial financing is a little bit different than that. It's not just about the monthly payment. And education and knowledge, I think, is the power that entrepreneurs need to kind of gather for themselves to help understand the process to make a good decision. So I think there's the portion of, we think there's a lot of free money out there. There isn't necessarily. But then if I do need to access capital, what is the best way to understand and navigate the financial system?
Yeah, I think I'd echo some of that. When speaking specifically for traditional financing, it's not a mortgage. I know when I went for my first business loan, I've started 2 businesses, and I was expecting a low interest 30-year loan, and that's not how it works.
Right.
So that was a wake up call for me. But I would also say is that there's a million ways to finance $1 million. And
Yes.
so banks are obviously the starting point, particularly if you have a good relationship with one. But there's other ways to do it, and you can get very creative, from banks to government programs to friends and family to yourself to all sorts of ways. And so business financing typically is not super clean. It's usually a little bit dirty and like ugly, and it takes some work and cobbling many things together. And so you just have to be prepared for that, because you're going to have lots of obstacles, and it's going to be very easy to throw your hands up and say, never mind, this was much more work than I thought.
Because just like each business is truly unique, the options and the alternatives and the process that we look at, and a bank might work together with Paul's group to kind of put things together. So getting that education, talking to a banker, learning the process is really important, and being prepared. Yeah.
So what are the reasons that businesses come to you for funding? What are the top reasons?
Oftentimes people are getting ready to start businesses. Maybe they have businesses that are growing or expanding, and maybe they have a specific purchase. Maybe it's a piece of real estate for their business, maybe it's a piece of equipment, maybe it's a vehicle. So they know that they don't necessarily have the cash in their checking account. Or maybe there's a business that has seasonality, and they need to sort of be able to manage, in the summertime their business is very busy, but January, February, and March there isn't. So they have some type of need for cash, and we often, walk down the process to help understand what their business is, how do they interact with their customers, how do their customers pay them, and then try to develop a plan and find a solution that makes sense and looks like the business can afford to make those payments or come up with that repayment stream.
So there's two main avenues businesses come to me. Number one is a bank actually would come to me on a business's behalf. So my organization and my role, I'm the bank's best friend, because if a bank doesn't want to quite give you all of that money, that's when I can step in and give you what we call gap financing, where I can fill that gap. So if you want $125,000 from the bank, and the bank only really wants to give you $100,000, my organization can help get that extra $25,000. That works great for the bank, because a lot of times my organization will be what's called subordinate to the bank. So if they do take a lien on your property or your house or something else, I'll come in and actually have the bank will have what's called first position. So they like me because I'm willing to be behind the bank, so to speak, right? Is that, yeah, right. And then the second way business comes to me is if for smaller projects, if they just get flat out denied from the bank, my rules can be a little bit more flexible. And again, it has to be for a smaller project. And by smaller project, I mean under $50,000. But my organization can do direct lending, but they have to be denied by a bank first and foremost. My organization, organizations like me, by the way, if you're not in Cumberland County, there's other organizations like me everywhere. We're not there to crowd out banks or to take banks' business. We're there to help you establish a relationship with a bank.
Go ahead.
Well, I think each business has a unique opportunity, whether it's growing, whether it's needing to purchase something, or whether it's starting up, is to evaluate what does it cost to turn the lights on in that business, and why do they think they need to borrow some money from the bank to get that rolling. And as we evaluate the situation, we want to try to make sure that the funding source, the need, that these pieces match. And sometimes it's, maybe it's easy to explain if you need to purchase a vehicle or a piece of equipment, then that's something that's tangible. I need $20,000 to buy a vehicle. How do we look at what the interest rates are, what the payments are? Do I have a down payment? Because in traditional, bank financing, there isn't anything that's 100% financing. You typically need to have some kind of down payment. So it's really understanding the cycles of the business, the industry of the business, and what I usually really need to understand from a customer is, how do you interact with that checking account or your deposit account? Do your customers pay you at the time of service? Or do you take a deposit and wait to be paid for the rest? Or is it a situation where you sell your product and service and you invoice your customer and you wait 10, 15, 30, 45, maybe
Years.
60 days to get paid. Yeah. Or is there seasonality? Like I said, there are some businesses that, their busiest season is January through June. And then the second half of the year, they don't have a lot of that business. So, learning those cash cycles helps us sort of evaluate what is the best product, or how do we, provide some type of lending support or coordinate with Paul's group to decide, is a loan a good idea for the business?
And I think one of the important things to add to this is there's a whole sphere of organizations like me, even in Portland. So there's a place called CEI, there's a place called MITSI, there's a place called the Maine Venture Fund, there's a place called GPCOG. Lots of acronyms and lots of names that you don't understand, never heard of. And so it's really important to partner with a bank that knows the sphere, and the bank will help leverage that for you. So not all banks and not all loan officers are created equal, because if you have a loan officer or a bank that's not really educated about what those resources are, you might be told no, and you think that's the final answer because your loan officer told you can't get money. So I can't stress enough that even though one loan officer or one bank told you no, it might be a matter of that bank or that loan officer actually just isn't educated enough in all these other resources that can help you get this financing together. So I know it can be frustrating to go to a bank, and even the bank that you might have been with for 20 or 30 years, they'll be really quick to tell you no, but there's other banks out there and other loan officers that say, hey, look, I can be part of a larger financing package that includes some of these organizations. So it's worth stressing, if you've been told no, if you're at a bank, it may not be the end all. In fact, I promise you it probably isn't. And so it makes a difference who you partner with.
And if you do business here in the city of Portland has a loan pool program as well.
Oh, okay.
Nancy Martin can be an amazing resource here in Portland as well.
And we've had deals that we've worked with my organization and the city and a bank and another place. So there's been 4 of us that all get together to try to make something work. So.
Very true.
So that makes me ask, and you've kind of touched on it already, but where is this funding coming from then? You've mentioned many of those buckets, so maybe we should try to parse those out a little bit for people.
Yeah, the easiest one for me is I have what's called a regional revolving loan fund, and that was funded by the Maine legislation. I think it's somewhere between 6 and 8 years ago. I can't quite remember. But essentially, it's just a big bucket of money that was allocated through what's called the Finance Authority of Maine. You might have heard the acronym FAME. And every county or every economic development region, we all have a pot of money that's usually a couple $1 million that's made specifically, and the only use we can do is to loan you money. And so I manage my regional revolving loan fund of a few $1 million that is there to help with this financing. So the primary source of my money is that, and then I also help administer some grants and some other funds, but I don't want to get too convoluted. But most of my money comes from state of Maine through the Finance Authority of Maine.
And in the banking sphere, there's lots of, goodness, every corner there's a bank. And for banks like Gorham, we're what's called a mutual, or even, your local credit union. We are institutions that are based here in these communities, and the deposits that you put into our bank stay here in these communities, and that's what we lend back out to our customers. So, thinking about, where does my business do business? Am I a regional business? Am I a national business? Are most of my customers right here within 10 miles of downtown Portland? Choosing that banking partner is super important to be able to help you understand, if I'm working with a local bank that lends to local customers, well, the deposits stay here in those communities. But oh my gosh, my business has locations in 3 different states. You might need a larger bank to be able to have access to that capital, or a branch location to do that. Banking certainly has changed over the last handful of years in terms of that bricks and mortar is a little bit different, because now you can have a machine on your desk that you can run your checks through, almost like you have your own teller station in your desk. But I think for small businesses, it's really kind of rolling up their sleeves and thinking, where do my customers come from? How do I need to, do I need to make deposits? And for banks, that's our funding source, is our depositors, primarily.
Does these funding sources change depending on how established the business is?
So on the lending side, if you are an established business, then typically you have a track record. So just as if, when you're thinking about if you were to go buy your home, one of the things that they're looking at is how long have you had a job. So in commercial financing, if your business has been in business for some time, then often that makes the lending process a little bit easier because we can look at the last 3 years of your tax returns for your business. You can pull together a current profit and loss statement, and then you might do some projections or budgeting because, say, for example, your business is growing, you need to borrow some money for that. So yes, if your business has been established, sometimes it can be easier, but not always. I mean, goodness, if you think of where businesses have been in the last 3 years, their financial performance might not have been as great as it was prior to 2019. So it varies. But for businesses that are starting up, Amy, to kind of work in that area, sometimes it's thinking about, what is the nature of the business? Is there a business plan? Do they have good projections? And then the folks that are starting the business, what is their industry experience? What have they done? What is their background? If you have always been in, say, trucking, for an example, and you were a truck driver for a number of years, and tomorrow you want to start a retail hair salon, as an example, it's kind of one of those, well, what is your experience? You've been driving a truck, which is great experience, but now you're going to switch to running a hair salon. So sometimes it's understanding who the owners are, what their background, what their experience is, and then, what are they hoping to achieve with this loan or the grants or whatever the access to capital it is. Because at the end of the day, whether you're doing business with Paul's Group or a traditional bank, we want you to be able to afford your loan payments. So helping you navigate what the process is, whether it's historical operations of your business or forward-looking with some projections and a business plan. Oh, okay, yep, this looks like it makes sense, and we can move forward with that. The other piece of the puzzle is making sure that as a business owner, you do know your personal credit. In small business lending, your personal credit is one of the first things that we pull. So if you don't know what your personal credit score is, or you don't have a great relationship with your personal credit, that's always something to sort of thinking about as you're kind of navigating that process and getting ready to ask for loans.
One misconception that I've heard from not only Portland Buy Local members, but others, and I think I even had this myself, was that government loan programs were really for nonprofits. Like there was no government money. That was all grants and stuff. That was if I'm actually a business trying to expand, then I can't access that money. But that's not the case. What kind of government programs are there for business?
So, for the record, I started and own a hair salon, so anybody can do it.
Really? Okay. All right. I love it.
Tulu Salon and Spa, located in downtown Biddeford. We bank at Gorham Savings Bank.
Thank you.
What was the? Oh yeah, money. Government money.
Government money for business.
Yes.
Yeah.
So there's two parts. The loan programs that I run, it is government money, but they are loans, right? And they are made to be paid back. And to the earlier point, the whole purpose of my program is I take the interest earned on those loans and I lend it out only to more businesses. So so this is what would be called an economic development tool. The government gave me a couple $1 million. I can't run around willy-nilly and give it out to anybody I want to. But I can take a little bit more risks, and I can get it in the hands of people that might not get traditional financing. Mm-hmm. And then I take all that money I've learned on the loans and I just put it right back on the street. So the idea is it's a multiplier effect and it just keeps getting better and better and bigger and bigger. Mm-hmm. There are currently right now, I am managing 2 grant programs that are for private businesses. They are grants, they are quote free money, there are qualifications, there's rules around the program. They're also available to nonprofits. But they are available to businesses, small businesses. You can have 0 employees and you can still apply. And I think it's important to recognize, and I think you brought this up earlier, is that the source of those funds is ARPA, and ARPA was passed in 2020. And
ARPA is
the American Rescue Plan Act from COVID.
Federal money.
Federal money.
Yes.
So I think it's trickled through the state, but the source is federal money. And I think it's important to realize that those monies, the COVID money machine, is slowing down. It is turning off, and it is running out. So from my experience, I don't think there'll be an overwhelming amount of grants in the future. I think we're kind of seeing the end of the abundant amount of grants. Now, with that being said, there's a lot of organizations as business owners in Maine. There's Maine Made, there's the Maine International Trade Center, there is the Maine Venture Fund, there is all sorts of organizations that you can access that will essentially leverage things for you that are essentially grants, right? So if I am a food producer in Maine, you can partner with the Maine International Trade Center, and they have access to getting you into trade shows and to getting you into other events that can help your project for less out-of-pocket cost for you. As a guy who has 2 businesses, until I got this job, I would not touch any of these organizations because I didn't trust them and they didn't make sense, or I'd click on the website and say, yeah, okay, that was enough. And it was 30 seconds and I was done, right? But I would encourage people to think of it, how hard would you work? How many hours would you work for $20,000, right? Because some of these barriers that we have as business owners, if we can get over those barriers and maybe click one more page or to just reach out to somebody like me, that value might be tremendous to your company, right? It's amazing how much we'll hustle for like the extra $50 or the extra sale of our product, but how easily we get frustrated when we're trying to interact with the outside world. So I just wanted to pitch that as a guy who is that has experienced this all myself, right? I don't know what GPCOG stand for. I didn't want to know, right? And by the way, my organization was giving out money before I worked for them, and I went to the application page. I was like, nope, this ain't happening, right? But that was a $10,000 mistake because I didn't want to spend an hour and a half taking a deep breath and maybe doing a little bit of understanding of the program. I, as a business owner, said I just took the $10,000 and said no thanks, right? But then I freak out because my electricity bill is $40 extra that month. So those are things just to keep in mind because I think a lot of small business owners have the same mindset. So.
Well, and staying connected. For example, if you are a business that operates here in the city of Portland, get onto the City of Portland's economic development page. They have a job grant program that I think has done its course for this year, but should get refunded again for next year. So, a grant is something that doesn't have to be paid back. And yeah, there's a little bit of work sometimes that goes into it, but and usually with a grant, the other thing I should mention is there's usually some type of catch. Maybe there's a match. So if there's a 10,000 job creation grant, you might have to say, well, I'll also front the $10,000 to hire that employee. But if you can hire a new employee and there's $10,000 of city money and $10,000 of your own money, well, there's a pretty significant impact to your business. So staying connected to, if you do business in a particular city of town, go look to see, do they have an economic development organization? You do business here in Cumberland County, check out Paul's website. Just like you say, kind of stay tuned to that. Oftentimes the grants are industry specific. So food, MTI is another one that does a lot of engineering.
Quite a bit of money actually right now.
They do, yeah.
And not just for engineering technology.
Yeah. Usually it's purpose, so grants are usually purpose driven. So whether it's job creation, product creation, new product development, but even if you reached out to somebody at MTI and maybe it was an exact fit, they might say, well, hey, go check such and such. So yeah, there's a little bit of work sometime. And then CEI has a Small Business Women's Center, and they have an office here in Portland. And sometimes CEI has some grants, and they have this really neat program called the Wicked Fast Loan. That kind of whether it's as you're having your cup of coffee in the morning or whatever it is, just a little bit of research and a little bit of time. It's amazing what's out there if you have a little bit of.
Yeah, and there's a group of people taking advantage of that, and there's a group of people that don't, right? And so I'd encourage you to move towards that group of people that start to learn how to take advantage of it, because it's all there. They're tremendous resources.
So to get to this, all of these organizations, I mean, I can imagine how some people listening to this are like, okay, I'm trying to write all these pages down.
Alphabet soup.
So who is my first call? The bank? Is my first call my municipality, or both? Like, where can I go to 1 to 3 total contacts that can get me access to all of those organizations, or at least know of them?
I think that's hard. I think that's one of the challenges all those organizations have, is they can be fragmented and siloed.
Yes.
Right, and so that's the difficulty.
So who knows them all?
I'm question. There's several people that know them all. I think that I would reiterate, if you're looking to borrow money, your first call should be to your bank. But again, if you're told no, please understand, or if you might be able to pick up if somebody that you're talking to doesn't necessarily know all of these resources. Everybody can always email me directly at GPCog if you look at it. But also, honestly, the main, I'll say it slow, so that way we can, because you're right, because I know about scribbling them down. But the Maine Department of Economic and Community Development, if you just Google that, they have some website, they're like a couple of their landing pages have a lot of these organizations that you can drill down to.
MECD.
Yeah.
Yes.
Yep. Yep. Yeah, I think exactly. So I would go with that first is my hunch, because there isn't going to be that magical place.
Right.
So let's say the Maine Department of Economic and Community Development, DECD, for acronym wise, but
Yeah.
that's what I would say.
Yeah. Yeah. And then, and anytime, whatever city or town you're doing business in, you should definitely find out, is there an economic
Yes.
development arm of
Yes.
this city or town?
Yeah.
Because each city and town, I think it was the town of Gorham just had something, and they kept reaching out to us as bankers saying, we need more applications,
Yeah.
we need more applications.
Yeah.
So, I think if they had a contact list of some of the smaller businesses in their community, they wouldn't be reaching out to the bankers saying, who do you know to connect us?
So Portland, South Portland, Gorham, Westbrook, Scarborough, Biddeford, Saco,
Yep.
all of those Wyndham,
Yep. Yes.
Bridgeton, all of those towns have somebody's job that's working at town hall to help you.
Yes.
And their title is typically Economic Development Director. So all of those towns I just listed, I'm sure I just missed one, but those are all towns whose job, there's one person, maybe two, and in the case of Portland, there's a whole department.
Yes, there is.
Whose job is to help you access funds, help you point you in the right direction, and give you these resources. And we're fortunate, because in the Cumberland County area, that's a rarity. There's not a lot of other towns in Maine or areas where they have economic development directors sitting at town hall. But all those towns I said, you can find them on your town website. And honestly, that's probably a better resource than actually coming to me first, because I'm going to just point you to that person next.
And, and in the banking sphere, I help with SCORE. I'm a SCORE mentor and a subject matter expert, and I teach a class for SCORE. And one of the things that we talk about is when you're thinking about banking, is being able to walk into a bank and see if you can talk to a commercial lender. The folks that work in the branch may or may not be the ones who are the most versed. They're the ones to do your daily transactions or maybe help you do a wire transfer. But most banks have commercial lenders or small business lenders potentially. Can I be connected to a small business lender? And that's often a great resource. I mean, there are some folks that, I've been at this bank for a long time, and some people you talk to for a long time before they're either ready to borrow money, before they're ready to maybe expand or to buy that building, but just sort of that education and that knowledge and thinking about accessing your financial services. There are so many different products that your bank may have even for your checking account to help you speed up collection of payments. That if you haven't had a conversation with somebody, I'm not an expert maybe in your type of business, but we're experts in banking. So trying to find somebody that you can talk to help say, this is how my customers pay me, or this is how I process credit cards. I think one of the things that I find so stressful is when I hear a customer that's taken a loan from their credit card processing company because it was fast and easy, but oh my gosh, the interest rate is like 25 or 30%. And I don't know how they're allowed to do those things, but I think sometimes small business owners get in a panic or get in a pinch and they just see it. And boy, I wish that you had talked to a financial services expert to have that conversation to find out if is it a bank loan? Is it getting connected with somebody like Paul's team? The SBA doesn't lend money directly. EIDL lending was a whole separate thing, but the SBA and the Finance Authority,
which is the Small Business Administration.
Sorry, the Small Business Administration. Yeah, they don't lend money directly, but they have a web portal that you can go on to and you can fill out all kinds of information and get connected to a lender. Now, sometimes it's like the big national banks that respond to it, and it's a little crazy, but finding a bank that you can talk to and just sort of navigate some of the nuances of your business, because there is no one size fits all. Yeah. Every business has a different product, every business has a different customer base, and how your customers pay you is as important as what you need to pay your employees or what you need to pay yourself, or how do you navigate payroll, or whatever the little nuances are of the day-to-day business. Do you process credit cards? In some cases, if you were able to process credit cards for your customers, yeah, you pay a small fee, but you're getting paid quickly, not waiting. So kind of having a chance to ask those questions and talk to a financial services expert is super important. And I always say in small businesses, you need a good CPA, you need a good attorney, you need a really good insurance agent, a banker, and then sometimes if your business is doing well, and maybe it's an investment advisor, but the insurance agent and the banker, we don't charge you by the hour. But sometimes if we all get together and collaborate, we can help point you in directions to think about, well, gee, I haven't repriced my insurance in the 3 years that I've been in business, and insurance has changed so much. So, kind of being connected with those professionals is really important to kind of help navigate. We've gotten a little off track, but just to help navigate that big sphere of when I open the door and turn the lights on in my business today, there's so many things that are coming at you very quickly.
Insurance is a big one, and I'll just put a plug in that we did do a series last year with some attorneys that talked about small business insurance. So go back to our YouTube page and look for that one to get a little bit more information about what you don't know about how you should be insuring your business. So I'm kind of going to take us off into a little, not really a tangent, but a very different type of financing, and see what you both think about this, is investors, right? So I'm then providing equity to somebody to raise money. How have you, can you talk to me about how a small business might do that?
Sure. I mean, if you think about a small business, usually it's maybe 1 or 2 people that own the business together. Maybe there's 3 or 4, it depends. But in the example, we'll say if there's 1 or 2 owners, you may have used some personal savings, you might have used some home equity, you may have just said, okay, I'm gonna start my business today, and as you had sales, you started to generate some cash in your checking account. But you own the business. Bringing on an investor means usually you're giving up a portion of your business's ownership to somebody else who's willing to invest in your business. And it might be $10,000, it might be $25,000, it could be $250,000. The number doesn't matter, but it's kind of thinking about, all right, I've started this business, or we've started this business together. Now I have an opportunity to get some capital. Someone wants to invest in my business. Usually investors, there's a portion of ownership that they want to take, and that can bring some different kind of twists to your business. Are you ready for somebody else to be part of the decision-making process? Or will they invest this money for a period of time, and then after 2 or 3 years they expect to be repaid? And if they're not repaid, then what are the consequences to that? And usually what I always counsel folks when they're thinking about investors is to talk to their attorney, to talk to their investors, because most investors are looking for some form of return.
Right.
Maybe it's, if they can make 6 or 7% in a CD or a savings account, they're willing to maybe take a little bit less return to help you grow your business, but maybe not. So understanding the terms and conditions, if somebody wants to invest in your business, what is that end game? Would they like a piece of ownership, or will they, just kind of put the money into your business and give you a few years to either repay them, or, does it convert into something like ownership at that time? And I think sometimes the hardest thing for people to process is, sure, I'm going to take an investor on, and they want 10% of ownership of my business, and they want to make decisions as well. And in some cases, it's very helpful. You might bring somebody on who has expertise and experience that you don't have, and that investment can be significant. But sometimes, stopping to think, okay, we've invested, or someone's invested in me, what does that do to my decision making, and what can that do for the growth of my business?
So 2 quick things is the Main Venture Fund, I've said it a few times, that's an organization that will actually do equity investments in your business. So that's a organization that's with government funding, and it's literally like a Shark Tank atmosphere. If you get to a certain point, you make a pitch to their board of directors, and they will fund your business, and they will actually take equity investment. So it's called the Main Venture Fund. They've done it with plenty of main businesses, and they've for some significant amount of money for some of them. And the only thing I would add is, if you're going to bring on investors, you need to set appropriate expectations. In the sense, if you're starting a business, you might not even know how to pay yourself, right? Payroll is scary, and taxes are scary. And all of a sudden you're looking over at your brother saying, hey, give me 10 grand. And he doesn't even know what that means, right? So I think investing can take a million different forms. It's how I got to own my salon. Is I was doing my business plan for my sister, and I said, well, heck, I think this is actually going to work. I'm going to give you $25,000, and I want some of this salon. And so there's a great example of how investment worked, where my sister said, hey, I'm going to start this. She looked to me to help with her business plan, to help get financing. I started doing it for her and helping her, and said, I want in on this action. For my obvious love of hair and style. But there's an example, and that was with family, right? And that's dangerous in itself, because my sister's 4 years older than me, and she beats me up, and there's all sorts of dynamics there. But I think it's important to realize, whoever's investing might not actually even know what investing gets you.
Right.
And you might not even know what that means. And so keep it simple. Don't overcomplicate it, and start talking in terms that everybody can understand, right? It doesn't have to be all lawyered up. It doesn't have to have an expert swoop in, take 20 grand from you guys to put words on paper. You can actually do this on your own or with somebody checking your work, and make sure that the investing can come in a million different forms. To give you an example with my sister, the way this worked with my sister is I had an equity investment. I was paid as an employee. I was paid $300 a week. And then I have essentially dissolved my ownership in the salon, given it back to my sister with the agreement of, if it ever gets sold, I get 10% of the sales price, right? And so there's just an example. That's just a random thing. That's an honest, true example of something that happened with me in my life. And that might not be what all investors want, but there's just a great example of, it's not all the same. Do what works for you. Keep it simple, and the expectations are absolutely key.
Absolutely.
Great. Yep. So I think we're going to open it up to questions. First, I just want to go to the folks online. So if you have a question, put it in the chat, and we will read it off and answer it for you. So Joe, do we have any questions in the chat yet?
Not yet.
Okay. Do we have any questions from the room?
Can I have him as a brother? Because I know
Eden says, can I have him as a brother?
We could do a whole separate hour on opening a business with family.
Oh, yeah.
And that would be super awesome.
I mean, would you want? I mean, I would think if you do that, that you would want to have an attorney at least help you write up some kind of contract, or.
What I'm going to do is not speak, because I'll give you super bad advice here. Because I have done all of my business stuff with no attorney. I've always incorporated myself. I've always done all my organizations. You can see the reaction from the banker over here.
Yeah.
And so.
Well, if you need a consultant,
I
here's Paul.
will not. To be very clear, it's bad advice. So I'm just going to smile. So.
But honestly, I mean, most businesses are started in that manner. It's what we kind of call bootstrapping. It might be friends and family. It might be your personal savings. You might take it from your home equity. You might use a 0% credit card. You might tap your 401k or an IRA. I mean, it's that kind of that initial sort of, how do I gather a pot of money so that I can, get started? And one of the things that I can't tell you how many times in my career I've said, don't quit your day job. In some circumstances, you want to kind of demonstrate that this business idea is sustainable and that it can generate revenue and have a level of what I say profitability, meaning, I can generate revenue, I can pay my expenses, and then there's something left over at the bottom so that either you can take your salary or, oftentimes people, when they go from being an employee where there's benefits and paid time off or a paid parking spot, whatever it is, when you go from being an employee to being self-employed, there are just so many nuances that you may not have even realized went on in the background from your employer, that when you jump out and go by yourself, the reality check is almost frightening. Like you mentioned, payroll, just getting set up for payroll or Social Security quarters or however all those pieces work. But friends and family and we call it bootstrapping when we do this. It's just kind of, you know, getting started organically in your business and having a little bit of cash. And there was a deal that we were working on recently, and it was a very, very large ask for a business plan that hadn't been tested. They didn't have a customer following yet, and didn't. I mean, it was a really interesting idea. But do you really want to borrow a whole bunch of money based on projections or what you hope will happen when you open your door? So I think it's a very kind of challenging dynamic to sort through, to start a business versus to grow a business. I see a question.
So my question is, first, what are some of the stuff you guys consider in terms of debt, like medical bills or credit card, of course, to calculate debt to income ratio? And then say I want to borrow $50,000, what would be the interest rate on that? Is your interest rate currently lower than other banks, or is it about the same? And how would you calculate that monthly payment on that $50,000?
So it's a very good question. And you know, there's two pieces to sort of when you apply for a commercial loan, and I'll let Paul speak to his piece, because a lot of what we do is similar. What we're trying to do is evaluate, can the business afford to make the payments? And then we look at the personal situation. So we say, how much does it cost to turn on the personal? You know, I would say, what does it cost to turn on the lights at home? And then what does it cost to turn the lights on in the business? And then we bring that together to say, okay, at home, there's maybe a mortgage, a car payment, student loans, credit card bills, et cetera. And then here's this business that's either growing or new or established, and here's sort of the income and the expenses. And then what's left over is sort of how we get to calculating those debt to income ratios. And when you buy a house, I mean, it's very, you know, there are ratios that they expect in what's called in that mortgage industry. Commercial lending isn't quite as precise as that, because owning a business, there's pieces that flow through your tax return that we kind of navigate, because the way you file your business tax return, it isn't necessarily all about the cash flow, it's about how you pay your taxes, and I won't go that deep, but it's a very delicate balance between what's the personal income and expenses and the business income and expenses. And then when you say, if a business needs to borrow $50,000, my answer is, it depends. Do you need to buy a piece of equipment? Are you starting a business? Or is it just absolute working capital? Is yours a business that is service and you don't need equipment, you don't need a building, you don't need, you know, tangible things that you touch, but that $50,000 might be for payroll, it might be for insurances, it might be for leases. So depending on the nature or the purpose of the money you need to borrow, it might be a line of credit or it might be a term loan. And usually when you're looking at bank financing, or we're partnering with Paul's organization, there's an expectation that a business, if they need to borrow $50,000, that they're going to bring some of their own funds to the table as well, their down payment or their contribution. So if the total cost to start your business is $100,000, you have maybe $50,000 in cash and you want to borrow $50,000, then we're going to say, okay, what is the sources and what are you going to spend that $50,000 on, and then try to match you with a loan product that makes sense. So it might be a line of credit, or it might be a term loan. It might be a loan that you pay monthly over 3 years or over 5 years. So do you have a budget? Do you have some projections? Do you have a plan, so that we can kind of roll up our sleeves and say, okay, you need to borrow $50,000, this is how you'll spend it, and then we try to match you with a product that makes sense. But your personal credit is super important. As a small business owner, how you have handled your personal obligations, we kind of believe it's a pretty direct result on how you'd handle your business obligations. So if your personal credit has got some hiccups or some mess, that's something that you might want to take a look at and dig into and kind of clean up to demonstrate that your ability to handle credit is good. Yeah. Mm-hmm. I don't know if you had any other thoughts on that.
I think the thing I'd add is, a lot of banks are going to want what's called a guarantee by the Small Business Administration on the back end.
Right.
And those have credit requirements.
That's true.
So the reality of that is if you don't match that credit requirement, the bank isn't going to be able to get their insurance on the back end, and you'll probably be denied. And so that's a reality for especially business owners that are just starting. So that's why personal credit can be super important. I would say that, you know, one of the things that you can work towards is to start thinking smaller. Try to get something off the ground. Try to bootstrap something, so then you can start demonstrating the history of your business activity, and then maybe go to the bank. And versus, hey, I have this idea and I know it's going to work. Trust me, give me $100,000, right? And because guess what? If that's the case, they're only going to look at your credit. They're only going to look at all that stuff, and you're probably going to be denied. So just because your current situation might not be there, you can start working towards that financing now by maybe taking your idea, and if it's this big, make it this big, and see if you can crush it when it's this big. And then you're going to the bank with something a little bit more than a startup, and that will help. To answer your question, if you're looking at $50,000 over 5 years, $1,000 a month, maybe $1,100 to $1,200 a month with the current interest rates, and realize business loans are 5 to 7 years. If you're lucky, they're short, which means your payments are high.
High. Yeah. That's really good advice, Paul, because I think, you know, in banking terms, we're looking at cash flow, we're looking at what's called collateral, and we're looking at your capacity as a business owner or a manager. And the example that I used earlier that Paul refuted, but is, you know, we talk about your capacity, you know, what is your experience in business ownership? What is your experience in this industry? So, you know, again, if you can check that box, and then, you know, cash flow. Personally, what does your cash flow look like? What does your business cash flow look like? And then the third piece is collateral. Now, typically banks don't get, loans don't get declined because of collateral. We can use things like the Small Business Administration or the Finance Authority of Maine to help us get over that hurdle. But typically, you know, there's some type of assets that the banks are looking for you to pledge if you're looking to borrow money. Because if in the worst case scenario, and unfortunately sometimes, you know, bad things happen to great people and great businesses, and the businesses fail, and the bank has to liquidate that collateral. You know, we're looking to see what is available to help make the loan whole if we had to sell it. So it's cash flow, it's collateral, and it's management capacity. So Paul's advice is spot on. And how many times, and actually that one that I was sharing with you was saying to that customer, can you start small? Can you get a customer following? Can you demonstrate that there isn't any business like that here in Greater Portland? Well, why is that? Mm-hmm. Is there a demand? Is there a need? Or is your idea just so creative that, you know, will it be successful? It's hard to know.
You got to sell it.
Yeah.
So I think we have a question online that Joe's going to ask.
Yes, we have two questions online, and then there's another question in the room at least. So I'm going to paraphrase here. Christina is asking, can you share more about angel investors? And can you speak briefly about financing and how it relates to choosing an S Corp and or a B Corp business, if appropriate?
Mm. What I will say about angel investors, so Maine Angels is a great resource to talk to if you're looking at angel investors. And I think the one thing about investors that we may not have kind of shared is that usually investors are looking for an exit strategy. So if you're not looking for an exit strategy, meaning sell your business or do something else, investors aren't necessarily for you. But angel investors can take on things like your brother-in-law, Paul. So I think it really matters. I mean, in the formal sense, Maine Angels is a great group. In full disclosure, I'm on the board for Maine Venture Fund. So, and again, Maine Venture has done some amazing work in this state. And we're very grateful to have such a great ecosystem. And I'm sorry, I forgot the second half of that question.
I was just speaking briefly about financing and choosing an S Corp or B Corp designation.
S Corp or C Corp, maybe?
Yeah, because the
B Corp is very different than an S. Yeah.
Well, anyways, yeah, I don't.
Yeah, I mean, it really, the entity that you choose doesn't necessarily determine your ability to borrow money. In small business banking, usually the LLC or the S Corp or whatever that legal entity that you form typically is the borrower, because that's the business that's doing the thing. And then as a owner, you pledge your personal guarantee saying that, oh, if for some reason my business isn't able to make this obligation with the bank, then I personally will step in and use my personal resources to make the bank or the lending institution whole. So the legal entity that you choose really doesn't matter to the bank. I mean, a B corporation has its own kind of
Yeah. I mean,
purpose? I'm
yeah,
sorry.
it has its own purpose, and
Yeah.
it's a little different than what designation you're choosing
to borrow.
to borrow. But yeah, I would say if you have questions about how to designate your business, I would go to an attorney most
Yes.
likely to come up with that, because there are reasons that you might go with an S corp versus an LLC versus a C corp, et cetera.
Yeah.
The B corporation is a whole different. We probably won't get into it right now. So Christina, if you have more questions about that, we can definitely point you in the right direction there, because we do have a lot of B corps in the area.
Nice.
So should we move on to the next question? Yeah, go ahead.
Hi, I actually have a lot of questions.
And you're
I'll
in person,
try
so you can ask a lot of those after the fact too.
Yeah. So I guess my first one is a clarification question. When you were first talking about loans at the beginning, and you were giving examples of projects, I didn't hear if employees or marketing count as a project, and I just wanted to clarify, because you gave examples of buying a building or a transportation vehicle, things like that. So could you speak to that? to start
Sure.
with?
Those are items that are typically what we call working capital items. So if you think about all the ways that your business has to spend money, there are certain things that are just sort of in those day-to-day operations. Employees, marketing, maybe it's a website. It's not tangible things like inventories and vehicles and equipment and things like that. So, if the life cycle of your business, you will sell your product and service, and then you'll get paid. But each week you may have payroll to make. You may need the marketing to kind of get the word out there. And oftentimes there's a lag time between when you're generating revenue and when you can actually maybe pay some of those vendors. So often a working capital line of credit is sort of what kind of smooths over those rough spots of, I have lots of sales coming, or I need to generate some marketing to get those sales coming, but I don't have the cash in my checking account today. So that's oftentimes where a line of credit. And that's a very interesting dynamic. I have so many people who come into my office and say, I need a line of credit. And they walk out of there with a whole different kind of financing situation, because a line of credit can be very dangerous to people if they don't understand how to use it. A line of credit is usually meant, like I said, to smooth over whether there's seasonality in your business, or if there's times when you need to, say, spend marketing and then you'll get the revenue later so you can pay back the line of credit. But some people will draw down their line of credit, spend all that money, and think, oh, I don't even know how to repay that. So it can be a very powerful tool, but it can also be very dangerous if you don't interact with it in a kind of a smart way.
So the other question that I will ask is, for my personal example, I founded my business February 2020, and it is a travel business. So I don't think I need to explain that anymore. So my business has existed now for 3 years, but I am not making any money. I'm just going to be real honest about that, because the way that the business works, I have to launch these group tours that I'm running way in advance. And so then with how you were talking about how I take money in, it's a deposit when someone first books, and then they make their final payment by 60 days prior. So with something like that, I might not have money on the books again for another year or two, potentially. And I'm just wondering, if you were a lender, what I could come into that meeting with. I know you're talking about projections, so even giving examples of competitors and how they're doing in the industry. Like literally one of the top articles that comes out in the travel industry is about how group tour companies are succeeding and people are really looking to those businesses in such a difficult time for travel, making things easier for them, connecting with other people after they've been in, quarantine or lockdown for such a long time. And I'm wondering if those things can help influence in that.
I'm sure there's other industries that are parallel with that same.
Yeah.
trajectory.
Absolutely, and I think the piece is really developing a business plan and projections that help the banker or the lender understand, how do you generate revenue? When does it actually arrive? And then, being able to build a projection or a modeling that shows profitability. Because for your business to be successful, it does need to be profitable at some point. It may not be huge profits, but you need to, again, have revenues and expenses and then at the bottom line. But it sounds like there's obviously seasonality in your business, there's timing in your business, and being able to collect those deposits up front, hopefully that kind of gets you from point A to point B. But really digging into, and you can work with, there's a number of amazing groups here in the city, from SCORE to the SBDC, that can help you with that business plan and those projections, but being able to share with the lender, whether it's someone like Paul or myself, to say, this is how we generate revenue on a monthly basis, and then this is kind of what it looks like at the end of the year. And then you do, the first year or the next year you do month by month, and then years 2 and 3 you can annualize. Because if there is, as I say, seasonality potentially in your business, then year over year it shouldn't change too much, but just understanding when it comes in, what the expenses are while you're waiting, and then what does it look like at the end. Is that helpful? Yeah.
I'll take this opportunity to pitch new business recovery grants.
Ooh.
Go to gpcog,
Everybody write this down.
gpcog.org. New business recovery grants. I think we have newbusinessrecovery.org right now, so give that a try as well. It's specifically for businesses that were started on January 1st, 2020 and later. So it's for people that started during COVID and said, oh, what was I doing?
Mm-hmm.
Yeah, what if you were 4 months before that?
No.
I've been on the wrong side of everything.
You're on the wrong side of this one too, I'm sorry.
I know.
Check them out. The deadline's December 15th. It is a stupid easy application. It's a Survey Monkey. It's a one-page narrative of what happened to you and a one-page narrative of some sort of proof of your COVID harm, which does not have to be financials. It can just be links to newspaper articles that say travel shut down, airlines are grounded, all that sort of fun stuff. Deadline's December 15th. New business recovery grants, gpcog.org.
Can I just write duh?
You
And I think the city of Portland's going to have something similar in the new year. They just finished a round, and I think there's a new round in the new year. So
the thing about the city of Portland, it's an amazing program, but you have to prove you're low income as well. So just to be clear, and I'm not saying you are or you aren't, but it's a pretty rigorous demonstration that the owner is low income.
Right.
Which for a lot of business owners, you have no W-2, so you just say, here, I make zero money.
Right.
But just to be clear, they're different.
Right.
It's a different take on it. It's a Nancy Martin at Portland's amazing, but
Yeah.
they're all there. They're there right now.
Yeah.
Yeah.
With going to the city really quick, do you go to the city that the business is operating in, or that you live in?
Correct. So you wouldn't qualify unless your business is in Portland. And no other, to be clear, no other town in this area has anything else. So I wouldn't waste your time, so to speak. Portland just they use some of their ARPA funding to create these programs.
they did.
Yeah.
But none of the surrounding suburbs really have anything of note.
We have a question online, right?
Yes, so Christina's asking, are there additional special financing for women or mother-owned small businesses and minority-owned small businesses?
Very much so. Yeah. So probably not through a traditional bank, but there is through Coastal Enterprise Institute, which you'll hear as CEI.
CEI, yep.
There is something called the Indus Fund through.
It's Indus.
Yep.
It is Indus. Yep.
Through Coastal. It's a credit union.
Yeah, Seaport. No.
Seaport. Thank you.
Yep.
And then there's many other programs. I would send you first to CEI first,
Yep.
and then see what there is there. But yes, there are certain programs that have lower interest rates or more favorable terms for women-owned or minority-owned businesses.
And what I usually say to folks, it makes me crazy when I hear access to capital is difficult. Well, it might take a little bit of work, and like Paul said, it might take a little bit of research. But if your business is established, or if your business is getting ready to launch, you want to do a number of things. You want to talk to CEI, you want to talk to a banker, because in some circumstances, an SBA guarantee loan might be provided to you on better terms than one that is specially designated for something else. So asking good questions, getting connected to folks, that's really the key. My biggest fear is when people do that www. whatever and they borrow from a national lender, they take an advance from their credit card, and oh my goodness, you're just, we had a customer the other day who was saying that their interest rate was like 35% on one of those PayPal credit card loans, and it's heartbreaking and devastating, and how they landed in our office now, it's such a bummer. Had we been on the front side of that one, you know, this is an amazing community to start and own a business. Not everybody needs to borrow money, not everybody should borrow money, but being connected and asking good questions and getting kind of plugged into all these resources, it's a little bit of work.
Yep.
But I'm always cautious about, you know, is it special for a special spot? Sometimes those are great. Sometimes we collaborate. You know, CEI does a piece, and bank does a piece, and you do a piece, and it's quite a process to make it all happen.
Do you have any more questions online?
No more questions on that.
Okay.
I probably could Google this question, but it's simple enough. Can you develop your personal credit score and also develop your business credit score? Are those two separate, or they're both attached together? I felt like I heard a rumor somewhere that you can develop the two. And my second question is, there's a lot of fix and flip shows going on and stuff like that. Would borrowing money for a fix and flip fall under regular mortgage, or is that going to fall under a different business?
So your personal credit score is probably the most important thing that you can, I mean, if I were to give you any advice walking out of here, if you don't know your personal credit score today, you should. And there are lots of organizations that are that don't charge you any money. You should never have to pay money to help understand and evaluate, you know, how to manage your personal credit. Business credit is a little bit different. There are business credit reporting agencies out there that in Maine, they don't have great coverage spots, and particularly in small business, there isn't great. You probably heard of things like maybe Experian or Dun & Bradstreet, but in most small businesses, they don't rise to that level. So business credit score isn't as synonymous with personal credit score. I would tell you personal credit score is the most important. And then usually when you're working with a smaller bank and you develop that relationship, and if your business qualifies, or we're working with somebody like Paul or CEI, making those payments each month is how you demonstrate your business's ability to borrow money. And just small business banking is really connected to your communities. And I think, you know, there are huge national companies that, you know, have Dun & Bradstreet scores and have Dun & Bradstreet reports, but those aren't the folks that are, you know, kind of doing the work that we're doing today that we're talking about.
And I'll be a little more blunt. Business credit doesn't exist. For the vast majority of very small business owners, there's no such thing as business credit.
Right.
It's not going to happen.
Yep.
It's about you. Right? So it's the credit cards are yours.
Yes.
The loans are yours. When you go to the bank, it's you. Yes, you have an LLC or you have an S Corp, but there's no such thing as business credit. Once you and I were worrying about business credit, we wouldn't be up here talking about this stuff because we'd be rich, right? Business credit exists for people that are not us.
Right.
Okay,
You're right.
so
You're right. You're right.
So in case it wasn't clear,
It's all you.
it's you.
It is.
And don't fall under and to your point, once you have a relationship with a bank and they can look and say you make payments, then yeah, maybe things get a little more flexible. I've been with Gorham Savings Bank for 20 years for one of my businesses and for 8 years for another one of my businesses. So when I go into the bank, they're going to look at my stuff and say, yeah, okay, you know, Paul's been paying his bills on time. But when you're getting started and for those first 5 years, business credit doesn't exist. I couldn't tell you how to pull my business's credit report. Never tried, never will, because it's not there.
Yeah.
To your fix and flip question, I think for houses, is I would be very cautious. There's probably a lot of predatory lending that can go along with those.
Tons.
The shorter term, higher risk loans that you would be looking for is going to be very attractive to somebody to offer you very unfavorable terms. And in this market with these interest rates and this real estate market, My unsolicited piece of advice to you is you'll be setting yourself up for very, very, very high risk business stuff that probably is not going to end well. So I would just say that. If it was 6, 7, 8 years ago, maybe, but I would that would have been my thought.
You might want a traditional loan
yeah,
there.
It's
Yeah.
your barrier is going to be very difficult there.
Yeah.
So, yeah.
Yeah. So we're at time, so I'm going to cut us off there. But if you do have further questions, feel free to send them to info@portlandbylocal.org, and we can get them to these folks. And for those of you in the room, stick around. I'm sure they're willing to answer some questions. But you've been very gracious with your time. But if folks want to get in touch with you, how do they do that?
Probably the best way is to reach out. Just call. My number is 207-222-1495. Or my email's on the website.
Same thing. Same phone number too. Call her.
No. And then I'll call Paul.
And we'll send an email follow-up when we have this video. We'll be sending this out to all of our email list too, so we'll make sure that there's contact information and maybe some links to some of the organizations that they've mentioned today. So thank you both. Thank you to Gorham Savings Bank. Thank you, Friends of Woodford's Corner and Oddfellows Hall, for hosting us. And stay tuned for the next IndieBiz EDU. Will probably be in February, depth of winter. So we will talk then. Thank you very much.